You have U.S. T-bill rates at 10% and the stock market on a tear. Why buy the rock? Why buy gold? But we have what's happening is all those interest rates are heading lower, particularly in the rest of the world, almost 1.8% in 10-year note in China, and deflationary forces. So the best things for gold are either deflation, T-bill rates going down, or inflation, big signs of inflation. But typically that happens in other countries that have debasing currency. The key thing to think about corn right now, it's almost a perfect bull flag. It's been at the price right now, $3,333 an ounce for 5 months. It first printed that place in August. Remember when the VIX took off, the stock market collapsed, and it collapsed, and just waiting. But what's happened since then, central banks are buying more, deepest pockets on the planet, and the most significant development is massive buying from ETFs. We had 4 years of outflows from corn ETFs. It's shifted very positive so far this year at about almost 93 million ounces total gold holdings. It's up almost 11%. So investors are tilting over to the rock, potentially anticipation a little bit of a back and fill in stocks.
All right, so we got all the economists heading out to Jackson Hole, Wyoming, because why not? It's mid-80s, no humidity, sunshine, great mountains. I get it. That's why Mike McGlone, he's out there early to make sure everything's perfect. So good for him. I mean, Mike McKee. What do you expect, Mike, from the commodities space? Anything this week are you looking for? Are you waiting for Chairman Powell to say something? What's your market telling you?
Yeah, unlikely he's going to say anything. So last year at Jackson Hole, Ira Jersey pointed out he tipped his scale a little bit, point out we'd be easing. But the market's already priced for it, and there's still a lot of data coming. There's so much pressure. But just the concept of easing with inflation above its targets, unemployment okay, and the stock market on a tear, and crypto's on a currency on a tear. I mean, I'm old school, Paul, like you don't ease in that environment. You tighten. But okay, we have a new world, a new environment. So the key thing I'm watching in commodities is copper, Dr. Copper, because copper made a significant high this year, just like crude oil did in 2008. It's on the cusp of potentially tilting down in the year, which would take everything with it. It's the last vestige of bullishness in commodities outside of gold, because crude oil's going down, corn's going down, so I'm really keeping a close eye on copper. And this is the bottom line for copper. The world's facing tariffs from the world's largest goods importer. That's a pressure factor for Dr. Copper, the metal with a PhD in economics.